Welcome to Talk Tickers, where we break down the most important earnings calls. Today, we're diving into Wipro's latest quarter, and boy, is it a classic case of mixed signals. You've got a company that, on one hand, seems to be delivering on its promises, but on the other, the market just sent the stock tumbling. So what's going on here? Let's break it down.
All right, here's how we're going to tackle this. First up, we'll hit the big headline numbers. Then we're going to dig into management's big story around AI and M&A. From there, we'll get to the heart of it, why the market reacted so coldly. And finally, we'll wrap it all up with our take, the next call.
All right, let's get right into it. The Q3 numbers. And right away, you can see why this was a bit of a head-scratcher for investors.
So, at first glance, things looked pretty good. The top line, revenue, came in at $2.622 billion. That's a slight beat, just a hair above what analysts were expecting. So far, so good.
But then you look at the bottom line, and that's where the story starts to change. The reported earnings per share, or EPS, was just over 3 cents. And that was a miss. The street was looking for 4 cents.
Okay, so a beat on revenue and a miss on earnings. But here's where it gets really interesting. If you peel back that top layer, management was actually pointing to some really strong execution under the hood.
So, what about that earnings mess? Well, it turns out there's a little bit of a catch. The whole thing was caused by a one-off charge related to a new labor code. Once you adjust for that, as the CFO made sure to point out on the call, the adjusted EPS was actually 0.041, basically right in line with what everyone was expecting. So that miss? Not really a miss at all.
And it wasn't just the adjusted earnings. They actually had a lot to brag about operationally. I mean, look at this. IT services margins were up. Total bookings looked healthy at over $3.3 billion. Operating cash flow super strong at over 135% of net income. And even employee attrition is trending down nicely. So from an execution standpoint, they were firing on all cylinders.
So with the financials looking pretty solid operationally, you could hear management on the call really trying to shift the narrative. They wanted everyone to focus on their big strategic pivot. And that pivot is all about AI and M&A.
And the CEO, Shrinie Pollyah, put it really clearly. He said AI isn't just some tech project anymore. Nope, it's now a standing board-level mandate. Basically, CEOs everywhere are recognizing this is the thing that can completely transform their business. It's what's driving the big spending decisions. They're wrapping this whole strategy up under a new brand called Wipro Intelligence, and it's basically built on 3 main pillars. First, they're building AI solutions tailored for specific industries. Second, they're using their own tools to get these things deployed faster and at scale. And third, they're plugging into a whole network of partners, startups, and universities to stay on the cutting edge.
And this connects perfectly to their M&A strategy. See, they just closed the acquisition of Harman DTS. The whole idea here is to bring in some serious engineering and AI muscle. Why? So they can go after those bigger, much more complex, and frankly, much more lucrative transformation projects.
Okay, so let's recap. We've got solid operational execution and a really compelling story about pivoting to the future with AI. You'd think the market would love that, right? Wrong. That's not what happened at all. It's like investors just looked right past all the good stuff and zeroed in on what's coming next.
And here it is. This was the trigger, the forward guidance for the fourth quarter. They guided to basically flat to maybe 2% growth. And that just slammed the brakes on any optimism. You could just feel the mood shift during the Q&A session. The analyst kept pressing, and management had to admit a few things. They talked about fewer working days in Q4, which is a factor, but the bigger ones, some of the huge deals they've won are ramping up slower than expected. And that new Harman acquisition, it's going to put a little pressure on margins in the short term. All of that combined was just not what investors wanted to hear. And the market's reaction was swift, and it was huge. All this uncertainty sent investors running for the exits. Look at the trading volume. It more than doubled on the day, jumping to almost 12.6 million shares. That's a lot of conviction.
And the end result for the stock? A pretty brutal 7.4% drop in a single day. And it's a perfect example of the market being forward-looking. They basically said, yeah, the current execution is nice, but we're way more worried about this cautious outlook. And they priced that in immediately.
So that brings us to the big question. Where does Wipro go from here? It's time for the next call.
Okay, here's our take. For Q4 results, we think they're going to land somewhere in the mid to low end of that 0 to 2% guidance they gave. As for the stock price, we see it being pretty much range-bound for a while.
It's going to be stuck in the mud until we see clear, hard evidence that those big deals are finally starting to ramp up and contribute to the top line. For that reason, our rating is market perform.
So really, it all boils down to this one question. Can Wipro's big AI strategy start delivering actual, measurable growth fast enough to change this cautious narrative? That's what everyone will be watching. And as always, this is not financial advice.